What's going on, everyone? Happy Thursday. My name is David. I'll be one of your co-hosts. Welcome to Sin City Crypto. What a day to be live. Not only to be alive, but to be live in studio. Huge news breaking over the last few hours. Silvergate Bank misses filing their 10K, which essentially is just a way for them to show investors what their financials look like and whether people should invest in them. In correlation to that, their stock has dropped over 50%, cascading effects as Coinbase, Crypto.com, CBOE, they've all denounced Silvergate and ended their partnership. We also have breaking news. One of the largest banks in the UK, HSBC, is not allowing people to buy crypto with their credit cards anymore. Well, good day to have Mark Yusko join us. He is the founder and CEO of Morgan Creek Capital, one of the largest venture capital firms in our crypto space. We're going to talk about that. We're going to talk about many other things. But first, here is your other co-host, Robin.
Hola! It's your boy, Big Rob, back in the house. Welcome to Sin City Crypto. If it's your first time checking us out, we're an entertainment-focused cryptocurrency channel where we take the old, boring, and stale information and package it up in a fun and sexy way. A lot of shakeup with the banks, man. I'm telling you. This whole Silvergate thing could have a big spillover, right? And we could see some, because that is the liquidity provider. It is the on and off ramp for fiat to crypto via the centralized exchanges. And Coinbase just said, we ain't playing around with you no more.
So did Crypto.com.
And Crypto.com.
So did CBOE.
Man.
So did a lot of other ones.
Damn.
Bless you.
Now,
what's up? I like to start off every show with giggles. I think today we definitely need the giggles because we might see Bitcoin go back down to 20K. Who knows? Who knows how the market's going to react? So,
20K, huh?
Awesome. So, ESPN, right? Sports capital of TV, right? And they have this channel, ESPN 8, I believe, or Ocho, where it's like all these weird sports, right? Like curling. I don't know. Well, there's a new sport that I came across thanks to ESPN. Combat juggling. Robin, have you heard of combat juggling?
I have not, no.
Well, my friend, feast your eyes on the newest sport that's going to take the sports world by storm. Combat juggling.
He's in for parallel. Deep happening there. What a play by Joe Showers.
What is the purpose?
By Joe Showers. Slava Benjaminson waiting on defense. He has been defensive fourth. Here is Sayers trying to lock up the arm of Ben Thompson on the right. Has two of his own clubs trying to steal now.
Who creates these? Like, come on, dude. Oh, man. Are you down to join a combat juggling league?
No, absolutely not.
Kyler, you down? Kyler said he's down. Rocco, I heard this is a big sport in Italy. Is this true? Combat juggling? No?
I feel like they would just juggle shoes in Italy. Like, I don't know.
Luca Versace, Donatello, Rio Bello.
We're juggling meatballs.
We're juggling.
Is there bowling in Italy? Is that an American sport? I don't know. I've never seen it in Portugal. Is there bowling? But I feel like, yeah. So it's an American thing though, right?
And my mic was off. So.
Your mic was off. Oh.
In Italy, I used to play when I was young, but yeah, it's more like a novelty. It's not. Nobody knows how to play.
Got it.
What about checkers or chess? You a chess guy?
Well,
I know
in Europe that there's like it's like this. You had these like metal balls, and then you'd like throw them in the dirt, and there's like a circle.
Oh, yeah, bocce.
What's it called? Bocce.
Bocce ball.
No, bocce.
Just bocce.
Yeah, that's
fun.
That always seems interesting.
Yeah. You know what else is interesting? That's actually pretty cool. So Polygon just announced a zero-knowledge identity for Web3, Polygon ID. So this is pretty cool. There's a video from the Polygon website at 0x Polygon. Polygon ID team is excited to announce 4 tools have been launched in the Polygon ID identity infrastructure to build a more equitable internet that places identity at the center of it. And here is a video. It's pretty cool, guys. Also, big shout out, Bullish Kenny G. $2 super chat said, where's the calf cam? Lil Calf Gang, LCG. Watch out for the new token coming out, the LCG token. All right, so here's Polygon ID.
Your identity.
The
The internet wasn't built with identity in mind. Proving your identity without losing it has been an issue since day one. Many efforts have been made over the years to address this challenge, but ultimately they failed to balance user privacy with compliance. With Polygon ID, there is now a suite of tools which allow developers to fundamentally change the trust model deployed on the internet. Now users don't have to necessarily be anonymous to maintain their privacy. Whether you're a DAO taking its governance to the next level, or an institution issuing real-world standards, use the issuer node to issue verifiable credentials to your users. The Polygon ID Wallet SDK empowers other Web3 wallets to add self-sovereign identity features to their own wallets. This includes the ability to store verifiable credentials and generate proofs on behalf of users to answer queries from verifiers. The Verifier SDK can be used by applications to verify user information based on their credentials without necessarily disclosing personal information. The unique ZK query language makes it possible to generate elaborate queries like, prove to me you're older than 18 and a citizen of the UK, possible. The concept of self-sovereign identity is serious, a human right. Polygon ID provides a set of tools to build a more equitable internet and place identity at the center of it. Get started today. Polygon ID, zero-knowledge identity for Web3.
Man, are you guys bullish on Polygon? I'm very bullish on Polygon. So here's, if you don't know what ZK, what this whole zero knowledge, ZK, what it means. So it's extremely important because you can essentially prove something without laying out your entire history. So the guy in the video, for example, prove to me you're over 18, right? I can prove to you I'm over 18 without giving you my social security number, without giving you my date of birth, without giving you where I live, blah, 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 blah. And so there's this video on YouTube from Mina Protocol. They explained zero knowledge and how it works, right? So you have the where's Waldo, right? So if you're not familiar with zero knowledge, listen. Where's Waldo, right? You got Waldo, little picture amongst the sea of other faces and pictures. So how can I prove to you that I know where Waldo is without showing you where Waldo is? So you take a piece of paper, you cut out a little thing, and you place it over Waldo's head. And I show you, I say, look, here is Waldo. I know where Waldo is, but I'm not showing you everything else around it. So you can still go in and find Waldo yourself, but I'm showing you, I'm proving it to you that I know where it is without showing you the rest. That's kind of basic terms as far as, you know, what zero knowledge is. All right, so let's take a look at the crypto markets, see what they're doing. So I'm going to pull up CryptoRank. We'll go over to my laptop here. Guys, if you're not using CryptoRank, highly, highly, highly recommended. This is my go-to when I'm doing my research. It's very customizable. So we're going to do the layout. We're going to take away circulating supply. We're going to take away this. We're going to add volume, and we're going to add, let's do volatility as well. Bam, save. All right. So some of the most volatile assets in the top 3, or let's do top 100. Filter.
Also, Chemo and Crypto gave a $2 super chat as well. He said, just give me the cyborg enhancements already.
The cyber what?
I don't know.
Enhancement?
I don't know if I missed the first part of that super chat, but
yeah. And then Kenny wants to take the money calf cam. Said low calf energy. All right, so what are some of the most volatile crypto assets right now? Conflux, this is the China blockchain coin. People call it the China coin. China. That is at 107.4% volatility, followed by Stacks, WeMix, SingularityNet, and BitGet token. If we take a look at some of the biggest gainers, if we take a look at what's happening, over the last 24 hours, Bitcoin has lost 1.17%. Are you surprised that this number here, with the Silvergate news, Bitcoin hasn't started tanking? Would you have expected it to just start tanking?
With Bitcoin?
Yeah.
No.
No?
No,
You don't think
it
Silvergate's a
hasn't.
big deal?
It hasn't spilled over yet, and nothing has collapsed. Nothing has went under. Nothing has went down. You just have.
But we know markets are
Remember,
forward-looking.
Silvergate was already down like 80-something% on the from all-time highs. Now it's down 90%, right? And does anybody really care who Coinbase partners with to change fiat and to bring in and out of fiat? Like, end of the day, as long as they have somebody to facilitate those transactions, that's all they need, right?
No. Are they going to have someone to facilitate those transactions?
I think I was trying to find out. I loosely heard they're going to use Signature Bank. I'm trying to. I don't know if I heard it on somebody else's channel. Anyways, I'm trying to verify, but I think they're going to use Signature to facilitate, which I'll expand on that if they do. So, what else you got?
What are your thoughts on the Polygon thing? The ZK IDs.
It's interesting.
That's dope, man.
Yeah,
it's coming.
This is all standard protocol for scaling, right? This is all the evolution of crypto, and every chain is going to use scaling solutions. I think that by consensus, the go-to, the one that has the least amount of worry, I guess, when it comes to security, would be the ZK rollups, right? I mean, I feel like you have to use it, right? I mean, I don't think there's any layer one that I'm aware of that's in the top 50 that hasn't discussed zero knowledge if it's not already being implementing it in the future.
Zero knowledge is almost and I don't know if it's perfect because I don't know if there's anything better that's going to come or if there's anything better out there, but it's essentially as perfect as it's going to get, right? You keep part or majority of your privacy while still giving up information that people need for whether it's KYC, whether it's your identity, whether it's whatever the case may be. So zero knowledge proofs via zero knowledge rollups, like that is, I believe, the next big narrative that's going to drive the crypto space forward as far as adoption and barrier to entry, right? People's biggest thing is, I don't want to KYC, I don't want to give my thing up. Well, with zero knowledge proofs, you can essentially satisfy those terms and conditions. Also, hold on to majority of your privacy. So that's pretty good. All right. So we had a super chat from Chemo and Crypto. Give me my Cyborg enhancements. You got it, bro. Shipping them your way right now. All right, let's go back to crypto. ETH, $1,633, down 1.2%, followed by BNB, XRP, OKB. Why are you still there? Cardano, 35 cents. Dogecoin, and Polygon Matic. Polygon at $1.21. It saw a run up to $1.52. Came all the way back down. Looks like everything's kind of going to be consolidating. So we will keep an eye on that. Nothing crazy happening. If I swap over to the Bitcoin chart, I have not changed a single thing on this chart. This trend line is still valid. Look, we're still bouncing off this trend line. So if you would just have bought, sold, you would have been able to make some money. So this is bullish. You know what else is bullish? You know what else is not bullish? My apologies. Is Silvergate Capital. So let's briefly talk about this, and then we'll bring on our guest, Mark Yusko. So this is from Be in Crypto. And guys, it's a developing story, so we might get some more news here in the short term. Silvergate Capital misses the SEC annual report filing, and their stock plunges 50%. Let me actually take a look at Silvergate stock, where it's at right now. SI down 53.44% just since the stock market opened 4 hours ago. 4 hours, down 53%. Is this the end of Silvergate? Sure does seem like it. And I'm curious to see what Mr. Yusko thinks and how this is going to reverberate throughout the crypto industry. So it's a couple things highlighted here. In a filing dated March 1st, Silvergate Bank has delayed the filing of its annual 10K report. 10K report is a comprehensive annual report publicly traded companies in the U.S. must file with the SEC. The report provides a detailed overview of the company's financial performance, business activities, and risks. And then we had this. So, in the same article, you have Coinbase tweeted, at Coinbase, all client funds continue to be safe, accessible, and available. In light of recent developments and out of an abundance of caution, Coinbase is no longer accepting or initiating payments to or from Silvergate. Followed by Crypto.com suspends USD deposits and withdrawals via Silvergate. So the few banks that were servicing crypto, one has fallen by the wayside. The other one has put stipulations, or we know at least they have maybe not ended their relationship with Binance, but made it extremely unreasonable for people to use Binance, right? If you're not on or off ramping at least 100K in fiat, Silverbank won't touch you on Binance. We have the Fed coming out, the OCC coming up. They say they are not telling people, they're not telling the banks to not service crypto, but they kind of are. They're saying, hey, sure, you can do it, but bam, 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 and you'll get this, 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 and this, and you won't be able to do this, 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 and this. So, is this a real concern?
Hey, hell yeah.
Wait, I want to share some of your thoughts.
All right. So just we brought it up again. We're bringing it up again. So just a little how we got here, right? Silvergate provides the exchanges with the on and off ramps for cash. So when you deposit money onto a Coinbase, for example, what ends up happening is you're depositing money to Silvergate, and then Silvergate credits Coinbase. And then when you withdraw, Coinbase sends the funds to Silvergate, and then they credit your bank account. And so they're the on and off ramp. They're the facilitator. Key part of the whole machine. Now, with that said, they also act as a bank. They also lend and borrow money. And in the same way that assets were left onto FTX, there was also money and value left on FTX from Silvergate. And so Silvergate took a massive loss. Not only did they have exposure to FTX, but they also had exposure to Voyager, Three Arrows Capital. The list goes on and on. I'm not exactly sure if Genesis is in that group as well, but there is no shortage of losses. And, one thing is, okay, so they had partnerships with Celsius, BlockFi, and Voyager. Also, their Binance US arm is reportedly under investigation. Voyager, FTX, BlockFi, and Celsius. So everything that collapsed minus Three Arrows.
It's like
I threw Three Arrows in there earlier.
In blockchain, people talk about solving the trilemma. Well, they solved the quadlemma.
Wait, here's the problem. If you spread yourself out and you're spreading yourself into all the companies that happen to go under.
Well, here's the thing.
That's
you're supposed to spread yourself out, right?
Yeah, but dude, like if you spread yourself out and it just happens to be that every major spread out area is just things that it went under. I mean, you don't need to be a genius mathematics, economics major. You don't need any of that. If you say, hey, man, you're invested in 8 projects, 7 of them went under. You know what that means.
What's your outlook? So if Silvergate goes on, that creates a massive void in the space, right?
Mm-hmm.
I mentioned HSBC, the largest bank in crypto, in UK, one of the largest in the world, is banning people from using their credit cards to purchase cryptocurrency via MoonPay, whatever those platforms are. So, like, we're seeing a trend here, and like, stop talking about spreading ego. So, are banks going to look at this and say this is an opportunity of a lifetime? Or are they going to say this is way too risky, I'm not touching it? What's your first feeling?
what banks are going to look at this.
Yeah.
I think the most progressive banks. Here's the thing: there's money to be made. Now, what Silvergate did was they took on, what you can say. Hey, perhaps they had bad risk management. Perhaps they didn't vet the projects, or maybe they just spread themselves out too thin, basically partnering with anybody and everybody that would take their money, or vice versa. And the thing is you can sit here and say, hey, we'll let you borrow money. We're going to charge you 20%. And you can be like, man, we're making a killing, or whatever the margin is. You can sit here and lend on it, make a killing. But the thing is if the person you're lending to, doesn't matter if you're earning 20%, 40%, 80%. I know those aren't the numbers, but I'm just giving you an example. No matter what kind of returns you're getting, if the returns don't come back at all because the platform went under, it's a broken business model. You've taken on too much risk. And that's what we're seeing here. And so you always can look at history, and history will always repeat itself. So this isn't going to be the last. There's going to be other banks that dabble into crypto and get burned because people just are ignorant and they think that things are different this time around, and they're never different this time around. They're in a different packaging this time around. And so there will be other scenarios in the same way. But at the same time, there's going to be companies that identify the errors of the past, other banks that identify, and they're not going to spread themselves so thin, and they're going to take safeguards and put in measures and perhaps not partner with 10 to 20 or 30 different companies and loosely just throw out money. Maybe they'll be a little bit more diligent. Maybe they'll be a little bit more decisive on who they partner up with, and to make sure that certain companies meet a certain criteria, instead of just blindly just handing out money to any international company out there. So I think that there'll be more banks that step up to the plate, but they're going to be a lot smarter about it. Majority of them. However, history will repeat itself. So there you go.
So I'm just doing some searches on Twitter here. So here's, kind of as it's coming in. So you have Gemini, they released a statement. We are actively monitoring the situation with Silvergate. We currently have 0 customer funds and 0 GUSD funds held at Silvergate. Also, Coinbase, I mentioned, but Circle, Paxos, and Galaxy Digital are also cutting ties with Silvergate Bank. So
Circle, Paxos,
Galaxy Digital.
Oh, man. This is almost like a bank run, right? On literally the bank.
I mean, yeah, you can,
right?
You can call it that.
Yeah, I mean, if they're ending partnerships, that means any liquidity that's there is getting pulled, and they better have the cash there. Because if Circle ends partnership with Silvergate, that means whatever assets Silvergate is holding that belong to Circle get paid out, right? And what was the other company? Circle, who else? Paxos,
Galaxy Digital.
Circle and Paxos, those are big, man. Galaxy Digital, sure, but Circle and Paxos are big because that's your stable coins. That's a big ass chunk of the market cap, man. Circle, number 5 on the coin market cap, has $43 billion value. How much of that is stored on Silvergate? I would say.
No, I mean we're taking.
I mean, a lot of it, I'm sure, is on exchanges, or whatever's not on exchanges. Whatever Circle has in reserves, I bet you Silvergate is custodying it. Right? I mean, where else would they custody it? They're going to keep it in a hardware wallet? I mean, they could. I mean, but they're going to need liquid. I would assume most of these are going to be liquid capital that they can move around. And if it's liquid, you're going to need it especially on a fiat rail system. Especially because it's interchangeable with the dollar, so it's got to be in a bank account. Yeah. It's got to be on Silvergate. So basically, I think that right there is the most damning. Is that official, or is that just a tweet FUD?
No, that's official.
That's official?
Yeah.
Good Lord. Yeah, they're done.
Someone said Silvergate stock looking juicy. Yeah, bad juicy. Not everything is good.
I wouldn't touch that thing.
You know,
It is supposedly the most shorted stock in America right now.
people are making money. It's down 50% in a little 5 hour, less than 5 hours. So I think this tweet's very important, you guys. Anytime stuff like this happens, right? I want to keep your eye on the prize here. Coinbase, Silvergate, Bank of America, the Fed could all implode overnight and it wouldn't change the number of Satoshis I hold in cold storage. So when you properly store and you properly hold your crypto and you custody your own crypto, it does not matter. Doesn't matter. Like this guy says, Stack Hodler, Silvergate, Bank of America, Coinbase, the Fed, Joe Biden, anyone. Doesn't matter. You custody your own crypto. If anything, these become buying opportunities as the market typically tends to overreact. But I asked you, Robin, if you were surprised that, you know, the market hasn't tumbled, but we know the markets are forward looking. So, you know, what is it?
I'm not sure, man, honestly. I think, you can price things in, but as far as something like this, I don't know. It seems pretty outside the box. We haven't had any collapse like this before, right? And so I don't think this is priced in. And I don't really know what the spillover for this even looks like, honestly. So I'm not sure. So,
all right. Rocco, we ready? All right. Let's go ahead and bring I'm very excited about today's guest. Never been on the show. I've been watching this gentleman. He goes on a lot of shows, a lot of interviews. Very, very good insight from the world of venture capital. The CEO and founder of Morgan Creek Capital, Mr. Mark Yusko.
Hey, guys.
Mark, how you doing, sir?
Doing great. How about you?
I'm very well. My name is David. The other gentleman is Robin. First and foremost, we know you are a very important person. You're extremely high in demand, so we appreciate you joining us. I know you're on a earlier show this morning. We watched that. Some great insight, but what a time to have you on as this Silvergate news drops.
Yeah.
So what are your thoughts? What kind of shakeup do you think this is going to have? Is it going to bring down user sentiment, trust? You think it's going to be okay? Is it going to be worse than FTX was?
Ooh, lots of questions in there. So, look, it's not a non-event. I mean, it's certainly a big deal. This is one of two primary banks that will bank crypto and bigger crypto platforms. So that's real. In terms of, you ask if it's bigger than FTX. My view on FTX is, yes, it was theoretically the second largest exchange, but it wasn't, right? I mean, it was a lie. It was a fabrication. So people freaked out, panicked, yet we're back to levels from before the Tempest. And it's interesting, if you look at the chart, we basically had the big drop in November, and then we made a nice teacup bottom, and now we're back with a nice handle. So the cup and handle pattern has been perfectly drawn out. And I will argue it was a tempest in a teacup, to quote Shakespeare. And people say, "Oh, that's ridiculous. It's much bigger than that." I'm like, look, FTX, let's say they stole all of it. Let's say all 10 billion is gone. 10 billion, it's a lot of money, but on a $1 trillion asset, which is total crypto market cap ish, just not that much money. And so I go back to 2000, what was it, 13 or 14? I think 14. When Mt. Gox went down, way bigger deal, way, right? Bitcoin price fell 80+% in 2 hours. Was 80 some odd percent of volumes. There weren't a lot of options. Today, there are 500 exchanges globally. The other thing, and it's interesting to tie Silvergate back into this, everyone said, well, FTX went under, therefore crypto's broken, and no one should use crypto, and no one should use exchanges. Really? Seriously? Okay, since the global financial crisis, not pre-global financial crisis, not in the global financial crisis, post global financial crisis, there have been 538 banks go under. Does anyone say we should stop using banks? You should get all your money out of the bank.
Did you
and
say
put it in your mattress.
538 banks?
538. 538. So
A lot of
it
banks.
happens, right? It's a lot of banks. And the thing is, there are thousands of banks. There don't need to be thousands of banks, but there are thousands of banks. And it's, look, I don't want to go too far down the rabbit hole, but maybe we will, I am of the belief that all of this is interconnected, right? There's a reason that some shady firms in the Bahamas, Deltec Bank, et cetera, happen to be connected to this whole ecosystem. There's a reason that SBF was connected to this fraudulent enterprise that was FTX. I'll argue it was always a fraud. It was always intended to foment fear, uncertainty, and doubt in the crypto industry and delay its eventual adoption. And I say delay, not disrupt, not derail. Incumbents have done this tactic for millennia. Incumbents like being incumbents. They don't like being disrupted. So when a new technology comes along, whether it was railroads, whether it was air travel, whether it was electrification, whether it was the internet, the incumbents will always try to delay the inevitable. One of my favorites is my grandfather-in-law was one of the original employees at American Airlines. His parents were horrified that he would leave a stable job with the train company to go work for this upstart company. And the train companies passed out pamphlets that said, if you got on an airplane, you would die because your body would cave in on itself when you got faster, when you went faster than a certain miles per hour. Clearly not the case, clearly FUD. And, all of us get on airplanes all the time. But
Yeah.
I don't know. So that's a long answer to a simple question, which is, I think the Silvergate thing is meaningful because look, if Silvergate and Signature both turn out to be bad institutions run by bad people, which it appears they probably are from all the available data. And here's the thing, right? Don't mess with Mark Cohodes. Full stop. He doesn't pick a lot of fights, but he's undefeated, right? He's Mike Tyson before Mike Tyson lost.
He's a
Someday
gentleman.
maybe he'll lose.
He's
But
a gentleman that put in that big short on Silvergate, correct?
yeah. And he's a famous short seller. He was early calling out SBF, before anybody else. And look, there's a bad history with the guy who runs Silvergate. And I'm not going to accuse him of anything here publicly, but there's some smoke, and usually where there's smoke, there's fire. And
Can you share any of the smoke? Anything you've maybe heard? Maybe not.
I mean, all I have to do is a Google search on the
Google
guy, and you'll pull up all. I mean, look, it's interesting to me because there's a lot of these people in the financial services industry history, just scammers that scam over and over and over. Like people say, "Oh, crypto invented scamming." Are you joking?
Yeah.
Scamming's been going on since pre, the buttonwood tree, right? When people would meet at the buttonwood tree and exchange paper stocks for paper money. I mean, there were scammers then.
Right.
And they'd lure you down a back alley and hit you with a club, and the guys with the tall hats, from Gangs of New York movie, would steal your stuff. So then we had wrench risk. Remember when people try to trade local Bitcoins and, they didn't lure you with a phishing scam. They literally hit you over the head with a wrench and took your hard drive.
Yeah.
So
I'm laughing, but it's not funny.
and I mean, it's funny in the sense that when there's money involved, bad people will be drawn to it. But in the end, good people find a way to protect themselves. And I think that's why exchanges like Coinbase are absolutely necessary. There's this whole mantra, the exchanges are evil and not your coin, not your keys, not your coins. Okay, fine.
You need them.
I don't disagree that holding my Bitcoin on a ledger is superior in that regard to holding it at an exchange. Okay? I'm not going to argue that fact. But here's the thing, 2 things. One, my 85-year-old dad, never, ever, ever, ever going to have a ledger. My dad doesn't even have an ATM card. He's not going to have a ledger. Right. So he's very happy having someone at Coinbase he can call and get his crypto. He says, well, he doesn't own crypto then. Don't tell him that. He thinks he owns Bitcoin. He thinks he owns ETH. He's very happy. And I don't want to do it for him because it's a bearer asset. And if I fuck it up, it's on me. And I'm not doing that. No, not doing it.
Yeah.
And so
I think you bring up a great point, Mark, is we're kind of in our own little bubble, right? Us who understand, who follow, like, all right, you got to self-custody, but we got to think we're a small fraction of what we expect our industry to be.
Tiny.
And so you need the barrier to entry to be low, and telling someone who's never bought crypto to say, all right, buy this, and now write these seed phrases, and now add this wallet to your ledger, and then move it here. And then they're going to never mind.
Now, also, so with the with FTX, it's left such a bad stain. Especially, it was the last domino, essentially the last big domino to fall. You could argue that Genesis, was the last one, but either way, with FTX, everyone has an association with FTX and crypto, and if they're not personally holding Bitcoin, they draw on that to say crypto's bad, crypto's evil. Especially, we're hearing the echoes from government in the form of trying to pass regulation. We have Elizabeth Warren out here trying to beat the drum on some kind of crypto regulation. Now, what I'm thinking about today with this whole Silvergate. And with the ongoing narrative is that that Silvergate was a Federal Home Bank member. And so is Signature, which is also Coinbase's company that they're also using now in place of Silvergate. Now, what happens if, and I don't know if you have the answer, or if you speculate, or what happens if Silvergate essentially goes under? Is there some kind of liability with the federal government? Does it, because they did borrow, I think it was almost $4 billion just last year from the FHL, and that's obviously not going to get paid back. And that dwarfs in comparison to what Signature Bank has out. They're a bigger bank, especially they borrowed a lot more. And so are regulators gonna look at the money lost that from a program that was established to help out the home market, which banks have found a loophole to tie in crypto into? Is this going to be ammunition for the government to jam some kind of new regulation down our throats and to just be like, hey, this is what crypto is doing? Because right now we're hearing it's facilitating ransomware payments, and I think next couple months it's going to be facilitating it's bringing down the housing market. Look what crypto did.
Such a great analysis, and here's the funny thing, right? If I'm doing something bad, doing something wrong, if I'm not good at my job, what do? I create a diversion, right? I get you to think about something else, right? We've all seen the movie, the episode of The Office, where he starts a little fire in the trash can to try to, divert attention, and suddenly the whole office is on fire. So, yeah, I mean, I'm smiling and chuckling because these banks were dicey, aka sketchy, aka on the edge before they ever got involved in crypto, right? Again, just do the research on the founders and you'll see. So, or look up at Deltec Bank, who's been doing bad stuff for decades. So that's not it. And what it is to your point, the housing market isn't going down because of crypto. It's just not.
That's gonna be their narrative,
Of course it is. No, of course. And you use the right word. Narrative.
And mortgage rates just hit 7.1 on a 30-year fix.
That's crypto's fault too.
And
that's crypto's fault. It's all crypto. Look, here's the thing. If you ask me, okay, what's happening is what I refer to as the then they fight you phase. They even hashtag it, right? So it's the famous Gandhi quote that Gandhi actually didn't say, and I wish I could remember the guy who did, and I give him credit, but whoever it was, said, first they ignore you. 2009 to 15, they ignored us. A bunch of nerds and geeks playing with your magic internet money. Who cares? Dumb, stupid, whatever. Knock yourself out. 2016 to 21, then they laugh at you. God, look at those nerds and geeks playing with their magic internet money. Ha, ha, ha. A couple $1 billion just left the banking system. When this stupid crypto, you're going to lose it all. Okay. Then they fight you. 2022 till, 2027, pick a number. They're going to fight. Why? Because look, if $1 billion left JP Morgan and went into Celsius or BlockFi or Ledden, who cares? Pocket change. Like, who cares? 10 billion? Nah, who cares? 100 billion? No fucking way. Stop.
Yep.
Stop. You stop. Because the banking system was still recovering from the global financial crisis. Right? We didn't have zero interest rates out of some accident, out of some Fed not understanding the laws of finance. We had zero interest rates for 10 years longer than the global financial crisis because the bank's balance sheets needed to be reliquefied. Once they were reliquefied, then they need to expand interest rates so they can get their NIMs back up, their net interest margins back up. This is all about, interest rates, it's all about the banks. Since 1913, it's all about the banks. The Fed was created by the banks, right? The Federal Reserve is neither federal nor has any reserves.
Yeah.
It is an entity owned by the banks and a bunch of wealthy, mostly European families that have been running the banking. I used to call it the cabal, but someone told me that that's a trigger word for people of the Jewish faith, so I don't use that word anymore. So we'll call it the banking cartel, but then I'm going to piss off the people in South America. So just the banking group. The banking group has been in charge for 800 years. Yeah. Right? I mean, just think about this simple thing. I want to lend you money in the old days. Okay? I lent you money. I wrote down in my book, you owe me $100. You come back a year later, pay me $110. I'm like, you owe me $220. You're like, no, I only borrowed $100. I'm like, no, says right here in my book. I'm an untrustworthy person. I changed the book. You owe me $220. It's your word against mine. And I'm the lender. You're the borrower. You go to debtor's prison. Okay. That's the way it worked. So the benevolent, in air quotes, Medicis came along 800 years ago and said, no. You keep a ledger. Mark will keep a ledger. Both write down 100 and you'll come back and pay. Oh, but now I'm a bad guy. So I paid the benevolent Medicis a little something, and they let me change my ledger to 200. And they're like, yep, Mark's ledger is right. You owe him 200. Okay. And that's been going on for 800 years. And they are the trusted third party. Right. Like the average person listening to this right now has money in the bank, right? Yeah. We all have money in a bank somewhere. Everyone realizes it's not your money. No, it's my money. No, it's not. Look at the bank balance sheet. It is their money. And you have an IOU, which is good 99.9% of the time, but that 0.1% sucks. 2012, you wake up in Cyprus, you go to the bank. Oh, yeah. You get 25 cents on the dollar. Yeah. Because they took it. They took it. and they can take it. Read the fine print. Read the fine print. Like I told this story a couple weeks ago. I was on a show trying to help my brother do a project. I need to send him some money. He has a Bank of America account. I have a Bank of America account. I'm not even taking it out of the system. I'm just transferring one account to another. $25,000 limit per day. Like, what are you talking about? It's my money going from your bank to your bank. What the hell? That's the limit. Okay. So I get to the third day, fourth day, and they're like, oh, $75K a week. Like, what do you mean?
Yeah.
But that pales in comparison to the first time I tried to send money to Coinbase. And look, we're investors in Coinbase. We were early investors. I love that company. I know people hate exchanges. And they're like, oh, you're such a shitcoiner. I'm like, no, not really. But okay. First time I did, Bank of America said, oh, 14 days.
Yeah.
Like, what do you mean 14 days? It's my money. I'm like, no. Read the fine print. It's our money. And we can, and we are going to hold your money for 14 days.
Yep.
And it's all that kind of stuff that gets lost in this transition. And we are in a transition. And inevitably, all things of value, and I do mean all things of value, every stock, every bond, every currency, every commodity, every piece of art, every collectible car, every case of wine, every piece of real estate, every private business, everything will become a token. And a token is simply an entry on a ledger. It's not a little piece of gold. It's not a little thing. It's an entry on an immutable, encrypted ledger, a blockchain. Those will hold, store, and transact all value without trusted third parties. We replace trust with truth. Truth is an encrypted line on a permanent immutable ledger. And that technology has been created. It's not going back in the bottle, but we're not there tomorrow.
And it's only going to get better,
we're not even there next year.
You think there's an area where both coexist? I mean, I think there's always a place for fiat, but I mean, or do you think that 90% of the market will be in some form on a digital ledger, say 20 years out or something?
And
like
Mark, I know you've talked at lengths about, your grandkids, that generation, they'll never have a regular wallet, right?
No, to that point, right? My granddaughter, just born 6 months ago, will never, ever, ever have one of these. Never, ever, ever have a leather wallet. Never. She will only know a digital wallet. She will never have paper money, ever.
What about an ID? You think the IDs will be digital as well?
100%. Now, but your question, and again, your question, so good. And questions are so much more important than answers. Like, that's why I'm so sick of hearing about ChatGPT. Right? It spews mostly interesting and okay stuff, littered with garbage and misstatements of fact.
Yeah.
But that aside, it's only as smart as the questions you ask, as the prompts. A computer is as smart as a screwdriver. And I'm sorry, people who want to disagree with that, but it's true. My 8th grade professor from 100 years ago said that, and it's true today. But the questions are the important part. And the question about, is there a world which they coexist? Of course. At least 20. I don't know what the number is, but over the period, we're not going to go from fiat banking, TradFi, to all DeFi on blockchain overnight. Not going to happen. There's this intermediate step, and that was CeFi. Now, the establishment, Ms. Warren et al., through the Bankmans, and for anyone who cares, do a little research. Forget Sam, useful idiot. Forget Caroline, useful idiot. Masterminds of nothing. Do research on the mom and dad. Find out, where did Mr. Bankman go to school? Who did he graduate with? Who is he an appointee on what boards? Look at Ms. Bankman. Find out how she helps certain people get around campaign finance laws. And then it all starts to make sense. So there are people who want this transition period to last longer. There are those of us building in the industry who want it to go faster. And all you can do is just keep building, just put your head down and build. But we also need adoption. And we were actually having really good adoption up until the media frenzy. I mean, go back and look. I love this. Go back and look at the CNBC montage of SBF. They called him Superman.
JP
They
Morgan.
called him the
JP
John D.
Morgan.
Rockefeller of crypto, the JP Morgan of crypto. They called him Michael freaking Jordan, which is sacrilegious here in North Carolina. I mean,
yeah.
they called him Jesus. They called him the Jesus of crypto. That's sacrilegious anywhere. So crazy. But they were complicit, I will argue, with this perpetuation of the myth that that was a real business designed to do real things. What I believe was designed for was to foment fear, uncertainty, and doubt and slow the adoption, let the regulators grab. Like, remember, and I remember because it was my birthday, May 9th last year, when Luna, I always think it's ironic that Luna came to Terra, right? Luna crashed. Kind of funny. And the next day, our Secretary of the Treasury said, Ms. Yellen said, "Oh, I just happen to have a plan to regulate stablecoins." Like, what? You whipped that up overnight? Like that 800-page document just appeared out of the ether? No. Yeah. Or after the FTX, it was 2 days. So, Liz is a little slower than Janet. Ms. Warren, here's a bill to regulate crypto. Like, that just got created in the last.
They can't even read the bill.
Really?
They can't even read the entirety of the bill in 2 days, let alone write it.
Exactly, write it. So look, I will argue that this has been going on for a long time, and it's funny. I'll be honest. I had a mini, I'll call it a mini existential crisis over the holidays. We got smacked in the face by FTX. We were not investors. Right? I said we passed on the deal 3 times. I never met the guy. Really happy about that. But, indirectly, we got smacked in the head with BlockFi and a couple other investments who did have relationships with FTX. And he stole from them. They are victims, right? They aren't the perpetrators. They're the victims. But still hurt. And I'm like, you know what? I had a pretty good life in TradFi. I chose this 5 years ago. Right. What the hell am I doing? And I was like, So I dug in and I reread some of the stuff. And actually I came across this piece by Dara Albright on decentralization that everyone should read. And it just snapped me right out of my funk, got me right back focused that this is inevitable. It's as inevitable as the sun rising tomorrow. And the genie ain't going back in the bottle. And the migration of talent is going to continue. I just had lunch with this amazing entrepreneur building in Web3. And every time I'm with people like that, it's just like, yeah, this is it. And
Mark,
look, I have the best job in the world. I'm a venture capitalist. I get paid to talk to the smartest people in the world and listen to their great ideas to change the world. So
I want to point out the fact that, and kind of applaud you for sharing that story, because people look at someone like you, head of a VC firm, and for someone to hear you say, I had my doubts, because people have had their doubts. I've sometimes had my doubts, and I'm sure the people watching have had their doubts. So for you to come out and say, hey, I've had doubts, but I went back to the basics. I read a book and I snapped back into it. I think that's very important. So thank you for that. Mark, I want to shift the conversation.
I also think the smartest people out here question themselves.
They're constantly evaluating.
Yeah,
right?
Yeah. You should always reevaluate.
Yeah.
Doubt is way more important than certainty.
Yeah.
I mean, my wife jokes, that, I'm frequently wrong, never in doubt. In fact, we're talking on Sin City, right? I was in Sin City, once, giving a speech. It's the only time my wife's seen me talk. I got done with the talk, and she had this horrified, she's like, Mark, you can't say things like that. What'd I say? She says, no, not what you said, how you say it. Like, what do you mean? She says, you say things so forcefully. I'm like, well, what's wrong with that? She says, well, people will believe you. That's kind of the idea. And she says, well, what if you're wrong?
That's
I'm
funny.
wrong all the time. I just change my mind in the next talk. So this strong opinions loosely held is the key to life. But doubt, even when I sound certain, and look, I'm a polarizing person. I'm a hyperbolic person. People get pissed off at me. They're like, you can't say that. I can say it. You don't have to believe it. You could question it. You could challenge me. We could debate it. That's what we're supposed to have, dialogue and debate in search of truth. But if I say something you disagree with, don't do the, oh, you're dead to me. That's stupid, right? That's like people, I won't talk to a Democrat. I won't talk to a Republican. What are you talking about?
Yeah.
I mean, that's just stupid.
Bitcoin
You should seek out people who have different opinions than yours
100%.
and have dialogue and debate in search of truth. That's what life is about. So, but doubt is really important, and having that time to go back to basics, back to first principles, and say, okay, where did this thesis come from? Okay, it came from the tech. Where did the tech come from? It came from innovation. Okay, what do I believe? Well, I believe in this innovation cycle. I believe in the tech. Okay, do I see adoption? Yep. Do I see metrics, KPIs that are all positive? Hash rate, all-time highs. Number of wallets over 0.01, all-time highs. Do I see disruption? And yeah, but that's good. People forget. And again, I lived it. I got the white hair to prove it. 2001, 2002, technical word, they sucked. They sucked, right? All these investments we had made in all these early stage companies, things like pets.com and Webvan, they went to zero. Pets.com is the poster child for the failure of the internet.
Yeah.
Right? Internet will never be more important than a fax machine. Chewy.com is the same company. Exactly the same.
Right.
It's worth like $20 billion. Webvan, failure. Amazon, Whole Foods, delivery, DoorDash, kind of the same thing. So what we needed was time, infrastructure, broadband, GPS geolocation, all these other innovations to coalesce. And same thing with crypto. Yeah, we got the money, right? Bitcoin is money. It's digital gold. Money is an asset that exists in the absence of liability. Only one in the whole world, gold. Everything else is credit or debt that's built on top of money. The base layer of money is gold. Then we have fiat that sits on top of that. And then we have the banking system, ACH and FedWire, et cetera. Those are all layer ones, layer twos, layer threes. That's the way it works. We're just moving those 70-year-old rails to new rails, and Bitcoin becomes the base layer, and then we can build everything on top of it. But why that is so hard for people to step back and look at, I don't know. And I guess if you're only in it for the memes, if you're only in it for the get rich quick, and you haven't really done the work, okay, fine. You probably should be scared. But that's true of speculating in commodities, speculating in currencies. How many scams have you seen over the last 20 years in currency speculation, right?
Well, according to Elizabeth Warren,
daytime TV, currency speculation, real estate speculation. There's scammers in every place where there's money. Crypto's not new in that regard. And yeah, if you're punting around in AMC and dog poop stocks like that, Bed Bath and Beyond, look, if you're a better trader than me, God love you. But most of that's all going to go to zero. Okay.
my wife's not going to be happy about that comment about Bed Bath and Beyond. I want you to know that, Mike.
Look, I'm with you, but it's an old economy model.
Yeah, I agree.
That, look, on the one time a year where I need something instantaneously,
Sure.
and I'm willing to drive there and now hope that they have it in stock,
Right.
it's okay. But for the 99% of the other time where I don't need it that moment, like the one place that auto parts, that isn't going to go online, because when your car breaks down and you got to get to work, you need that hose. You need that, whatever. So, but a caddy for your toilet paper, probably not urgent, right? I can pick it up off the floor.
Mark, you make some great points, and our community loves your insight. I want to pick your brain a little bit, okay? I want to shift this topic. So, people from the traditional world, they value assets, and you kind of spoke about this. You did a interview with Abra and their CEO, and you spoke about
you did your homework. This is scaring me.
I did my homework, my friend. I have OCD and I have ADD as well, and so if I even feel slightly underprepared, I start getting anxiety. So I like to be over.
Wow, that's nice.
You talk about how people in the traditional finance value companies, right? 23 times earnings, 23 times revenue. When you hear people like Paul Krugman, right? And I saw this he did a master class with CZ and Chris Dixon from Andreessen Horowitz. And he said, I can't gauge what is a good price for Bitcoin. What is a fair price? So my question to you is, how do investors such as yourself gauge a fair valuation for Bitcoin? Like, all right, Bitcoin now is cheap. Bitcoin is not cheap. Now is not a good time. Now is a good time.
Or is it just DCA for life?
Yeah. Well, what's the strategy for you and for maybe the rest of your peers in the space?
So a couple ways to think about this. So if you accept my premise that there's only one money in the history of the world, 5,000 years gold, right? A single ounce has bought a fine person's suit for 5,000 years. From Cleopatra's time to a suit of armor to a zoot suit in the 20s, Savile Row today. You go to Savile Row today, you plop down, $1,800, you will get a fine suit. Okay? So if you accept the premise that gold is money, okay? But gold suffers from two problems. If I had a bar, which if I were Kyle Bass, I would reach under my desk, and he has gold bars under his desk, and I would bring it out. And if I wanted to break it in half, which I'm not strong enough to do, but if I could, okay, so it's not very divisible. If I wanted to then stuff it into the computer to send to y'all, couldn't do it. So it's not very transportable. Bitcoin solves both of those. So Bitcoin is equally scarce, therefore it's equally hard as a monetary asset. It has created belief and custom, which is what money must have, right? There's a reason that gold became that thing. It could have been coconuts, it could have been stone tablets, it could have been puka shells, it could have been many things, but gold has some numismatic, properties, and it has some scarcity value, but mostly it was custom and belief. And okay, so Bitcoin is more portable and more divisible, right? All the gold in the world fits in 2 Olympic-sized swimming pools. All the Bitcoin in the world sits right here. Okay, I don't have all of it. I don't have any on my phone.
Are you Satoshi?
SimSwap me. I've been SimSwap twice. They got nothing, so don't do it again. Yeah. But I don't keep it on my phone. But the key is all of it could fit right there. And I could send you 1/100 millionth, one Satoshi. That's why in my Twitter handle, I'm hashtag 2.1 quadrillion.
Yeah.
Because there are 2.1 quadrillion Satoshis in the world. And that's all there will ever be. Actually, there's fewer than that because some get lost or stolen. But this is a long answer to say, if you take the assumption that gold is money and that gold, the monetary value of gold. So there's 10 trillion of gold in the world above ground. Half of that is necklaces and chalices and gilding on, Notre Dame where I went to school. Okay, that's 5 trillion. The other 5 trillion is the monetary value of gold that sits in central bank vaults and people's stores of value. Okay, I will argue pretty vociferously that Bitcoin will displace that, and that 5 trillion of total value is easy. Right? So we're going up 10, 12-fold from here. And that will be a normal adoption curve, an S-curve adoption. The first, 10% over 10 years, the next 80% over the next 10 years, and the final 10% over the last 10 years. So a 30-year adoption plan. And we're kind of 10 years in. First 4 years don't really count. Science experiment, too small, not real. Okay, so we're 10 years in. That's one way, okay? I like a better way because I can get to a more precise number using Metcalfe's law, okay? So if you think about a network is a very valuable asset. So what was the first network? So when I was growing up, I grew up in Seattle, and we had a CB radio and the ham radio, and we used to listen to WGN in Chicago, right? It's a long way away. Well, how did that happen? They had a gigantic antenna with a big old base station, and they could blast out lots of watts, and I could hear it in Seattle, Washington. Now, if you think about a network back then, every person that heard that signal was a node. And so this guy came along and said, that's how you value a network. The number of people that can hear a signal, the linear number, is the value of a network. Well, Metcalfe came along at MIT and said, no, because if two people hear it, but they have a connection, maybe that network has multiple connections. So maybe the three of us have connections and you two connect and each of I connect with you. And so there's more connections. It's actually an exponential number called Metcalfe's law. Then Reed came along and said, no, actually, in that Metcalfe's law network, there are subnetworks on the fringes. Like you take all the graduates of my university at Notre Dame, there's a subnetwork of people who play golf, subnetwork of people who play tennis, subgroup of people who play poker. Okay, those subnetworks have even stronger connections. I've actually come up with something, and I named it after a friend of mine called Vichetto's law. I will argue that the width of the connections varies. So some of those pipes are really restricted, some of those pipes are really wide. To me, it's a fourth derivative effect of networks. But with all of that said, I have a friend, Tim Peterson, N Squared Crypto. You guys should have him on sometime. And he has a model using Metcalfe's law to create a fair value for the Bitcoin network. What people don't understand is the Bitcoin network is simply a network of computers. Okay, it's the most powerful computing network in the world by a factor of 1,500 times. Not 1,500%, 1,500 times. It's 1,500 times more powerful based on hash rate than the CERN supercomputer. It's had, sub, 10th of a percent downtime in 14 years. Hundreds of millions of transactions, not one hack. It's the most secure network in the world. I will argue it's a pretty valuable asset. Using Metcalfe's law and Tim's model, I can come up with a value today, high 20s, low 30s. It's not precise, but let's call it 29K. Fair value. Price today is below that. I'm a buyer, which means I'm an investor. Investors buy assets that trade below their fair value. Traders buy assets that move, and they don't give a shit about fair value.
Neither do gamblers.
Speculators buy assets that are moving, and they don't care about anything except movement. Okay? Gamblers fuck it all up. The gamblers come in at the end, and they buy these assets well above fair value on leverage.
Yeah.
And they cause the liquidations that send us back below fair value when everybody gets afraid. And that was the trough June 15th last year.
But it'll always rebalance itself, even with
Of
the gamblers.
course.
Yeah, it'll always come back to baseline in some way.
Greed and fear are the most powerful forces on the planet.
Okay.
And human beings do two things incredibly well. We buy what we wish we would have bought, and we are spectacular at that. I mean, always buying after something's run. But the second thing we do is we sell what we're about to need.
Yeah.
So we sell at the bottom. And here's a crazy stat. JP Morgan data. If you just bought and held stocks over the last 20 years, you made 8.5%. Just bought and held an index fund, didn't do anything, just went out and partied every day, 8.5%. If you bought and held bonds, same period, 20 years, you made 5.5%. So all you had to do is pick one, or maybe you pick a combination, 60-40, and you made 7.5. Average investor made 2.9. How the hell did they do that? Buying the tops and selling the bottoms. And so when did most people who don't believe in the technology buy Bitcoin? Closer to 59, 69,000.
Yeah.
It was moving. Unfortunately, mostly guys. It's not a sexist comment, it's just reality. Guys suffer from our genes, right? We suffer from biological history, hunter-gatherers, right? And so we follow movement. I tell the joke, and I told it this morning, right? If my wife says, Mark, get the ketchup, I open the refrigerator. Honey, there's no ketchup. It ain't moving. I can't see it. Okay, she walks up, grabs the ketchup. It's right there. You're an idiot. If it ain't moving, I can't see it. But I just saw my secretary walk by, or executive assistant, sorry. I just saw my executive assistant walk by, and I moved. I could not watch, okay, because the eye follows movement. That's just what we are trained at our core to do. And so if you look at speculators and gamblers in our business, mostly male, doesn't mean there aren't crazy females or, wild females.
Majority of them.
But the majority happen to be guys. And that's not healthy for the ecosystem. It's also not healthy for their bank accounts.
Right.
I shouldn't rat out my brother, but he tells this story that he called me up, during the liquidation last November. They stole my Bitcoin. Like, what? Did someone break in your house? I mean, what? He says, no, I had it on BitMEX. Like, stop. You levered up an 80 vol asset. You got a margin call. You didn't meet it. And they seized the collateral. That is not stealing. Now, some would argue that was the business model of certain places. And so maybe that is kind of stealing. But that aside, people made the choice to lever an 80 vol asset. The problem with an 80 vol asset is you will have a double-digit drawdown every single year. And I know this because Amazon stock is an 80 vol asset. It has the same volatility as Bitcoin. Here's a curious stat. Amazon's been a public stock for 26 years. It's had a double-digit drawdown every single year, including this year. Okay. Average is 31%. So on average, every year you lose a third of your money. When was the right time to sell Amazon? That would be never.
Right.
Who bought Amazon 26 years ago and holds it today? There's 5 people. Jeff, mom, dad, ex-wife, Bill Miller. That's it. Same thing with Bitcoin. When's the right time to sell? Never.
That's
Stupid.
interesting.
Just keep accumulating. And because, well, what other assets? I like Ethereum. I do. I used to say the base, which was Bitcoin, Avalanche, Solana, Ethereum. I've gotten less excited about Solana. We were early investors. We made a bunch of money. I'm worried that there was too much pump and dump there and not enough building. Some people will argue with that, but I'm not as bullish on Solana as I used to be. I like Polkadot. I like Cosmos. There's some issues, but I like those. People say, well, what about Cardano? And I'm still waiting for people to prove to me that it's got the use cases and the adoption, but that there are people that like it. Same thing with Ripple and XRP. I'm like, maybe. We'll see how the lawsuit works out. But show me. They claim they have a lot of things that have signed as contracts, but I don't see that monetary value flowing. One of the big challenges in crypto is the structure, right?
Yeah.
In traditional world, if I own bonds, I have a contractual claim on the cash flows of a business. And if I don't get paid, I can sue. With equity, I have a contingent claim. And after the bondholders are paid, if I don't get paid, I can sue. I like that. With utility tokens, which is the vast majority of tokens, I don't have any equity. I don't have any debt. I don't have any claim on cash flows. I basically have to hope somebody buys it from me. And that's really not a great use case. And people say, well, that's just Bitcoin. Yeah. There can be one or two, right? Gold. The reason Buffett hates gold has no yield. Nope, has no yield. But it's the perfect store of value. It has been a perfect hedge. Here, I'll give you another crazy stat. Stocks, S&P 500, people are like, oh, it's almost back to all-time highs. Only if you price it in toilet paper. If you price it in US dollars, yes, it's almost back to all-time highs.
Did you call the US dollar toilet paper?
Oh, yeah, absolutely. And
what about when that toilet paper? What about when that toilet paper? What about when that toilet paper turns digital?
No, but then it gets worse because then it's toilet paper with surveillance and programmability. Imagine this nightmare, right? Imagine this nightmare. Tomorrow you get paid, and you get paid CBDC, pure evil, and you go out, you have a couple cocktails, and you drunk text something about the president. You wake up, your money's worth 85 cents. And then you happen to jaywalk because it was late at night and you were kind of, and now your money's worth 65 cents.
Is that something that can happen here in the States?
Hell yes.
Oh, it's coming. It's coming. Yeah. They just launched the pilot this morning. So look, all as dumb as we in the community think they are, right? The establishment, the bankers.
They're not dumb.
They're not dumb. They're
not.
Really, really. And they don't want to lose control. And they have control right now. And they control everything with this, right? It's not an accident. Think about this. A particular enforcement agency with 3 letters that I won't name, you got 2 choices. You can go after a company based in New Jersey that is simply taking deposits of digital assets, lending them out and paying interest. Okay, no token, no, just acting like a bank, but you can't call it a bank. A digital financial services company. Or you can investigate a Bahamian-based, quote-unquote, exchange that has affiliations with dodgy banks that you've censored in the past. Which one do you go after? I'm going after the ones in the Bahamas. Personally, I'm not going after the ones in Jersey. But who did they go after? The one in Jersey. Why? Because the one in Jersey was making the people in New York pissed off because the money was leaving fiat, converting to digital, because fiat was paying 0.
Right.
And I could convert it into a stable coin and make 6. Now think about that. I can deposit a stable coin, which a trading firm will then pay 12 to borrow, so they can lever up their trading desk, Susquehanna, Jump, etc. And the company can pay me 6 and keep 6. Nice spread, awesome spread. Profitable for everybody, good for everybody, except for the big banks. It's probably not a coincidence that if you were to look at contributions through lobbying to certain elected officials in certain places, that you could tie them back to big banks. But I'd do the same thing. It's like, look, my favorite story on this is there's a group in DC that tracks something called the Lobbying Index. Strategas Partners. Now they're part of. They got bought by somebody. It doesn't matter, but it's Strategas Partners. And they have something called the Lobbying Index. The Lobbying Index is undefeated against the S&P. What is it? You just take the companies that pay the most money to lobbyists and you buy their stock at the beginning of the year, and then you rebalance once a year. It's undefeated.
Oh, man.
And I tell the story in 2014, back before oil prices crashed the first time, ExxonMobil made $40 billion in profit. The corporate tax rate back then, before the Trump cuts, was 40%.
Damn.
So by math, they should have paid $16 billion in tax, right? How much did they actually pay? Minus 1.7. they got a $1.7 billion rebate because they were the largest lobbyists that year. They paid $370 some odd million in lobbying. Think about that. They turned $370 million into $17.8 billion in 1 year. That is an IRR, baby. That is an IRR.
So I want to meet their tax accountants. That's what I want to do.
Yeah, well, not only do you want to be their tax accountant, but you want to be their lobbyist. Because the lobbying business, look, it's just corruption. Lobbying is a fancy, sanitized term for corruption.
Bribing.
And we talk about the corruption in Russia and the corruption in India and the corruption in China. We got them all beat. We just call it lobbying.
We got to be number one.
And we are number one. And we are number one with a bullet because it's getting worse. And look, here's my homework assignment. Everyone should go and do a little bit of research on the Alameda Holdings. They had 400 odd companies. Half of them shared one trait. They had a single owner of the LLC. And I'm going to let you figure that one out.
Is it Elizabeth Warren? Would you be surprised if it was?
No. Well, it's funny you said. In a way, yes, because the person is the progeny of the largest donors to Elizabeth Warren.
Okay. So we're talking. I'm getting a George Soros sense here, kind of, maybe.
Well, he's above them, but I'm talking about Sam at Sam's parents. Okay. Look, Sam's mom runs, I won't call it money laundering, but she runs an organization that helps people get around campaign finance laws. That's her job, right? And the big VCs use it. And look, until they reform campaign finance, they're not breaking the law, right? It's like tax avoidance, tax evasion. Tax avoidance, you should do everything possible. Don't evade. Go to jail. Okay? Right. Avoid, don't evade. Same thing here. If the tax, the campaign finance laws say you can put it in a tumbler, not like Tumblr, like crypto Tumblr, but in this weird kind of foundation thing, and then the foundation through a super PAC makes the contribution, then it's not you. Well, that's nonsense. Right? We know it came from individuals abusing the fact that they couldn't do it individually. But until they change that law, it's not breaking the law. So it's set up so that people like George and the super wealthy, get to control the outcome. Look, I always say, if people really want to have a fun weekend, Google Bilderbergs.
Bilderbergs?
Knock yourself out on that one.
Bilderbergs. Like Build-A-Bear, but Bilderbergs.
So also, it's interesting you brought up campaign, and we've been on the subject with Sam Bankman-Fried's mom. It's interesting. How do you think that ties into the new charges? He's got 4 new charges, Sam Bankman-Fried, on campaign finance violations, which could carry up 40 years. Is that coincidental that his mom is in that
It's not coincidental at all. But here's the thing. I'm on record, so I'll probably be proven wrong. But Caroline and Sam already cut their deals, right?
Right.
Yeah. They pled guilty, but cooperated. Guaranteed, they're not going to jail, right? They'll get some deferred sentence, commuted sentence, whatever.
You're talking about Sam Trabucco, not Sam Bankman-Fried, correct?
Right. Yeah.
Trabucco, okay.
I'm pretty sure it was Sam, but it was Caroline in the second one, and I thought it was Sam, but maybe I'm wrong on that. But I think you're right.
I think you're right.
And they, did the deal, agreed to help prosecute, Big Sam. But here's the thing. If Sam's original judge that was assigned was still there, maybe it's a fair fight and maybe good wins over evil. But they made a change. Probably coincidence. Definitely. But the new judge is married to the lawyer that set up FTX. I don't know. Maybe that's just a coincidence. I don't know. I'm not hopeful that he's going to spend any time in jail.
You know, I've kind of had that same feeling, but I don't know. I think this case has gotten to a point where, like, if this dude doesn't go to jail, there's going to be more probing and prodding. And next thing you know, we find out Elizabeth Warren, Gary Gensler, this person, that person.
He's going to be the fall guy, man.
Yeah, he has to. Someone's got to be the fall guy, right? And
amen. Look, if you watch The Manchurian Candidate, someone.
That's a good movie.
That's
Denzel's my favorite actor.
Yeah.
Denzel's my favorite actor.
Exactly. But there's also a great line. I'm a big movie guy. So there's a great line in National Treasure where, Nicolas Cage has found the treasure and he's sitting with the FBI guy outside and says, you found this great, amazing treasure. What would you like? It's like, I'd really like to not go to prison. The guy says, well, someone's got to go to prison.
Right.
And then they cut to them busting the guy with the long hair up in Boston that he sent him on the wild goose chase. Someone had to go to prison. Yeah. So I'm with you. Someone has to go to prison. But I don't know. I feel like
you don't have any faith. That's what I'm getting.
It's weird. It's weird to me. It's just weird to me that Ghislaine Maxwell committed a whole bunch of crimes, right? Actually kind of admitted to a bunch of stuff and had this great lawyer, and that lawyer is Sam's lawyer.
Yeah.
I just think that's weird. And if you do a little digging on where did the original money come from to start FTX, there's some weird linkages to Epstein and Maxwell. And
is that why you didn't invest in FTX? I know you said
no. Look, I just got lucky, right?
Okay.
I'm a value guy. In fact, some of this stuff's really hard for me because I'm a value guy. I started in the TradFi world. I worked for a firm called Disciplined Investment Advisors, invest without emotion, do deep value analysis. And I have become tolerant of growth and innovation stories. And now I'm a venture capitalist. But here's the thing. We got shown the deal 3 times. But I never met them because the first time it came in, they were just starting and had an $8 billion valuation, basically as an idea with no revenue. I'm like, pass. And it was nobody from nowhere. And then they did the second round and they made the big announcement of naming the stadium and the Super Bowl ads. And I was like, maybe we should meet this guy. But it was $16 billion on 40 million of revs. I'm going, nope, can't do it. And then the crazy one, right? Then Sequoia is out pumping this $32 billion valuation. And that was when OpenSea was at 13.8. My head was exploding. I'm like, I can't be in this business if that's what people are going to do. Right. And Keith Raboy, the famous VC, tweeted, yes, we've all lost our minds, but you go first. You pass on the really hot deal because it's too expensive and tell everyone they're crazy. And nobody wanted to say the emperor has no clothes. But so we passed. I said I never met the guy, so I can't claim credit for knowing. Back in the Madoff days, we actually had a client that had a bunch of money with Madoff, and we told him to take it back because the numbers didn't add up, right? If this guy was really, at the time, a $20 billion hedge fund and he was doing index arbitrage, he would have had to be the largest client of 3 or 4 of the big primes. And every time we asked one of the primes, do you bank this guy? They're like, no, it doesn't make any sense. And so we advised this client to get out. And they said, well, why? I said, well, we called and said, we'd like to come meet you. And they said, no, we don't do diligence. Like, well, then we can't invest. If we can't come see that the numbers match and look at the books, we're out. So they said, well, he's our friend, so we'll take half. And I'll forget. So it was November 6th, 2008, the day before.
Yeah.
This family was having their annual meeting, and I walk in, and the matriarch, so the patriarch, built this big business, sold it, and we were helping him manage their money. And the matriarch says to me, "You are not allowed to say Bernie's name. He's the only guy making money this year. Everyone else you've recommended is down. The whole world is down. Bernie's the only one making money."
I wonder why.
Literally the next day, he said, "It's all fraud." And so, again, I didn't know it was a total fraud. It just,
Yeah.
I have a general rule. If you won't meet, then, but that wasn't the problem with Sam. Sam
Right.
met with you. He just lied.
Yeah.
And I will argue that people were fooled by the quality of the investor pool.
Right.
But I will argue that people didn't do their homework, right? I've been doing venture a long time, and I have nothing but admiration and respect for Sequoia, right? We were early investors in the 1990s, and they are the best of the best. But I've been doing this a long time. I've never seen, ever, and I'm not accusing anybody of anything. I'm just saying I've never seen an individual commit $200+ million to a fund and then have that fund turn around and invest in that person's company, $100+ million. Never seen that. So that has information content, right? If you're looking at that and saying, well, the smartest venture capitalist in the world is investing in this company, so it must be good, so I must pile in, you got to at least say, is it arm's length? Is it, I don't know. So but that never came out. And it reminded me, there was a story back when I was at Notre Dame, way back in the 90s. There was this venture capitalist, and she was amazing speaker. She was polished. I mean, she told a great story, and she had backing from this firm on Silicon Valley. And so all of us in the endowment space, Yale, Princeton, Stanford, Notre Dame, Duke, etc., we all piled in. And what happened was, Harvard thought Yale did the work, and Yale thought Princeton did the work, and Princeton thought Duke did the work, and Duke thought Notre Dame did the work, and Notre Dame thought Stanford did the work, and Stanford thought Harvard did the work. No one did the work. And it turned out didn't work out. And it wasn't like Elizabeth Holmes bad, but it was bad. And it was because everyone just assumed, because the Silicon Valley Venture Capital Fund was in, that it must be good. That wasn't the case. And it was a decent idea, but she just didn't have the chops to execute. Now, she wasn't committing fraud like Elizabeth or Sam, but, and I guess I shouldn't say alleged fraud. I mean, Elizabeth's been proven, but Sam is alleged at this point.
Mark, I want to, and I know you got to go. So I want to ask you. I want to ask you. Do you have time for one more question?
Yeah. Oh, yeah. Sure.
So this one's for the community, right? So you mentioned Solana, right? It's gotten this term VC token, right? VC token. Near's a VC token. Aptos is a VC token, and the reason people see that as a negative thing is because they think, all right, the VCs just get their money, make their money, and dump. Let me ask you, when your tokens, you're an investor in Solana. Your tokens now become unlocked. You get those tokens. Do you immediately just sell it to take profit? Do you what's the process so people understand?
No, it's a great question. And so it is a great question, but it's nuanced. And to be completely transparent. So in our first fund, we were allowed a small amount by our LPs to invest in other funds. So we put a small amount in Multicoin, and Kyle and Tushar invested in Solana, and a small amount became a very large amount. we weren't the original VCs. I mean, we were there and we were talking to them in real time, but we were one step removed. So we weren't negotiating with the founders. In that case, there's two sets of decisions. So the tokens come out of lock. Multicoin has to make a decision. Now, that decision is impacted by how big is your position, how liquid is the asset. This case, it wasn't very liquid, and that's why skyrocketed pre the big celebration in Portugal. And so they would distribute little bits. And for us, the second level decision was, all right, we're going to sell half right away. Like, we're just going to return capital to our investors, but we still believed in the project, so we're going to keep a little bit. And in hindsight, that was a mistake because we didn't think about how illiquid it really was. So we didn't manage that perfectly. If you look at the primary venture capitalist, the trouble you have is if you've got a small position, you can dump it. And that may cause some temporary price movement, but it probably can get absorbed if it's a good project. If you got a big position, and there are some VC tokens that are probably appropriately labeled that the VCs own a really big percentage, and you just can't get out. It's kind of like Bill Gates, right? Bill Gates, the price of Microsoft stock was quoted, whatever it was, $100, $200, whatever it was. Okay, that's if you want to trade 100 shares on NASDAQ. If you have tens of millions of shares, like Bill, that ain't the price. You could never sell all those shares for that price. And he had a thing where he would sell 1 million shares a quarter for a long time. And he would have to go around to Wall Street and negotiate natural trades because he could never get that liquid in the public markets. And if you think about the crypto markets, now what's come out is there were some of these SAM coins where you floated 1% and you were valuing the other 99 based on that 1% float. Nope.
Yeah.
Nope.
Yeah.
And that's just bad people doing bad stuff. And again, there's a story that there was a consulting company, again, back in 2000, husband and wife. By the way, husband and wife, run away. Brothers, run away. Family businesses, not always, but generally speaking, bad stuff. So husband and wife team, they floated 1% with one of the big ones, Goldman or Morgan, I can't remember. And the stock price went ballistic. I mean, just ballistic. And they just fed the ducks all day. Total scam, total pump and dump. Again, that wasn't crypto. That was the stock market.
Right.
And go back and look, I love Michael Saylor. He's a great spokesman for our industry. I like his idea. But go back and look what happened in 2001. MicroStrategy was the poster child for this problem. Had no liquidity, no float, highly owned internally. Everyone was shorted because it wasn't making any money. And the thing went from nothing, literally nothing, to $100. And they carried all the shorts out. And then the shorts came back. And it went to $200. And they carried the shorts out. And then it went to $331. And then it went to $3. Because the shorts were right. And Michael actually got censored and had to pay a fine and didn't admit guilt or anything, but and settled and has built a nice business and made a big bet on Bitcoin. So I'm not casting aspersions. I'm just saying those are facts. Those happened, but it was because of the lack of liquidity, and some would argue the manipulation of the price by market makers and front runners. And look, there's a reason that people get to trade for quote unquote free on Robinhood. it ain't free.
Nothing's free.
It's not free. And if you think you are a better trader than Ken Griffin, I love you, but no.
We love you too, Mark.
And not you. I mean, if anyone thinks they're a better trader, I don't. Not you. I'm not.
No, I know. I was kidding.
If the proverbial you thinks they're a better trader than Ken Griffin, God love him. Because look, Ken is one of the 5 smartest people I've ever met in my life, and I've been lucky. I've been an investor with him for almost 30 years. Wow. And the guy is. He actually might be the smartest people I've ever met. Smartest person I've ever met. I mean, I always said about Ken, he's a better analyst than all his analysts. He's a better trader than all his traders. He's a better lawyer than his general counsel. He's a better accountant than his CFO. He's just good at everything. And yet he's a visionary and he's a monopolist, which is, I mean, maybe John D. Rockefeller was better, but not that many people who are as good at their craft as Ken. So don't be on the other side of Ken.
Don't be on the other side of Ken. The last words of Mark Yusko. Mark, it's been such a pleasure to have you on. Your insight is amazing. You explain things so well. So first and foremost, thank you so much. We hope that you will accept another invitation in the future to come back on our show.
Sure.
We truly enjoyed it.
Or if you're in Vegas, we got this set up.
I will be. I occasionally come out to events out there, so we'll do it live one day.
That would be amazing. And on behalf of me, Robin, our team, and our community, thank you so much. Enjoy the rest of your day, my friend, and we'll see you soon.
All right. Be well, guys. Thanks for having me.
Thanks,
Thank
Mark.
you.
Take care.
See you guys.
Damn.
Man, what a wealth of knowledge there, huh?
Wow. That was like an encyclopedia how to invest, live, and breathe. And
no, he doesn't like ChatGPT though.
Yeah,
no, that's my boy.
Man, what a great show! If you guys like those kind of guests, you want more of those kind of guests, put a 1 in the chat. Also, big thank you to Jimmy. He gifted 10 memberships. And Robin, I feel like we should give some love.
Yeah. So I didn't even have time to write out. I got a few names here, but we do got Ellen, Perry D, XRP, J Daz, J Reyes, Juan Luis Alamonte, Ray Hogan, Knox Bill, Turkey Twizzler up in here as well, Susie Gemini, Skinny Pete, Blockchain Planet, and then we got Cryptos with a K, Ivan Hernandez. And for all of you that I missed, say hello right before we get off so I can give you a little love. Hola! Welcome to Sin City Crypto.
Also, I see a lot of names I haven't seen. Make sure you guys subscribe, ping the notification bell so you don't miss any more content. Maybe like the one we brought you today.
Yeah, Alex Miranda here as well. Crypto Souza. Yeah, Crypto Petro. Is that the petrodollar?
Yeah. Petrodollar. It's going bye-bye. All right.
Cryptemic Love. There's a lot of new people. Randy as well. So yeah.
And before we leave, just want to let you guys know that Bitcoin is unfazed by Silvergate. Price is actually moving up.
Oh, there we go.
So nothing crazy. No, I did not ask about barbecue chicken pizza. Maybe next time I will. But guys, we are done. What an amazing show. We'll be back tomorrow. Tomorrow we are going live a little later. We'll be live at 10:45 a.m. Pacific, 1:45 p.m. Eastern Standard Time. So make sure you ping the notification bell. Also, tomorrow morning, I will be on Crypto Wendy O. So come support. Come in the chat. Throw some olas in there. Let them know that we here, baby. The
better be like 1,000 olas.
25,000 olas.
25 bajillion olas.
I don't know what the hell I said. Go pick up some merch if you're a well member. Make sure to use your 10% off discount code. And go follow us on social medias. Go do this, go do that. Also, Rocco. Friends, family, friends, and family. And family and friends. Rocco is frozen. Thank you so much for joining us. It's been an absolute pleasure. Huge thank you to our amazing guest, Mark Yusko. Make sure to come back tomorrow, 10:45 a.m. Pacific Standard Time. On behalf of myself, Robin, Rocco, and Kyler, we love you guys. Until tomorrow. Standard Time 10 now. What the fuck?